JBlog, April 11th, 2010. Starting today looking at the world indexes. This is a broad um, world index from the Dow Jones people. And we had the little pullback in February, and that has been followed by a relentless uptick in um, in March and April. Basically, this market has been very unstoppable in those 2 months. And just going through these countries, South Africa is basically a nice trend line up. Now here is the country that everybody pins their hopes onto: China, the country that is going to lead everyone out of the recession. The chart doesn't look particularly strong. Actually, it has gone nowhere for quite a while now. Um, August was basically when it established the highs. Um, it's a little bit higher here, but then it's been dropping off again. So China really doesn't look that strong. Hong Kong definitely looks a bit stronger. Then we have India. India, of course, is a more natural economy than China. With actual internal demand, China is still very much export related. Um, and the accounting principles in China are questionable at best. So we don't really know exactly how China is doing. Japan has been a surprise this year. Japan has been doing extremely well. They're starting to show new exports, and they're starting to show the possibility of some strength in their markets. Whether they can hold out on that with the huge debt load that they're carrying is questionable at best, and their rapidly aging population. But for the time being, the charts say everything is a go. South Korea, all the producers, Taiwan, all looking pretty good. Great Britain, which is interesting because Britain really is in a lot of trouble, and again, another nation that could very well have some sort of a default coming up, yet the stock market doesn't seem to care about that. Um, so that's just an observation that the real economy and that of the stock exchange doesn't necessarily need to be related. France is another country that has borrowed too heavily. Again, it's going up. Um, Germany is going up strongly, definitely the strongest country in Europe. Canada, again, all of these charts are pretty well the same. There's no real telling which is which, so that's kind of interesting. Tells a lot more about liquidity and what kind of liquidity sloshes around the system than the strength and weaknesses of each individual country. Here we have the New York Composite. Again, same thing. This is all the same chart, and that's sort of scary because one would think that there would be some differences between the countries. But again, this seems to be much more liquidity based than anything else. Dropping over to the commodities, this is oil, um, crude oil, and it went up in a channel for the last 9 months. Then the channel flattened a little bit, flattened again. There was a possibility of a downturn here. And then this little spike happened. Now that spike might be related to Iran. Iran is, of course, currently flagged as the bad boy in the Middle East, and there is potential of there being a war there sooner rather than later, possibly within the next year. But Iran, of course, has the capability of stopping a large part of oil flow in the world, so that would be a messy war. Um, Definitely have to keep an eye on that because that would be a very big picture change if war were to actually happen there. At this point, it very much seems unavoidable. But we'll see how that continues. Stochastically, oil is starting to roll over, so we might have a dip here. And from a chart pattern, that looks the same way. RSI, it was once again on the overbought side of things and might be correcting again here. Um, Natural gas is the typical basket case. If there was a recovery anywhere in North America, natural gas would be going somewhere. But it's not. It continues to drop. Gasoline. Gasoline is making its way higher, um, which might be speculation that if the economy does recover, more gasoline would be used, or it could be that there's simply less refining capacity online. The VIX is has been dropping, has does have some spikes, but seems to be dropping to new lows. Everybody has pretty well discounted a second dip. Everyone figures that it's going to be smooth sailing from here on in. I wish I could believe that. I really do. Reading a book right now called the Great Depression Diary, and the observation that the author is making in this are truly frightening. Depression is not something I would like to live through, but I don't think I have a choice on this. So I continue being short, strategically short, um, that if and when something bad happens, I have some hedging. Um, but as I said, the VIX certainly indicates that there's absolutely no fear out there. Um, the newspapers, of course, continue to be bullish. Um, Bullish with questions. Um, some people are starting to wonder how much further this can run. One of the important or interesting things to observe is that a lot of the up days are on lower volume and a lot of the down days are on higher volume. So the rallies, even though they're strong in points, are not really that strong in volume. That's interesting to note. The other thing that I saw this morning is that the TED spread is once again on the increase. So banks are starting to distrust each other once again. Potentially commercial real estate and option arm expiries could very well put some of these banks once again in trouble. Um, but right now, this relentless up move has basically killed most of the bears out there. Um, Most people are bullish. Nobody believes that it could get bad again, and that's usually when things go bad. But it could very well be a while until that happens. Just a question of how much our governments want to indebt future generations. And then obviously interest needs to be paid on the money that is borrowed to somehow resuscitate this economy. They still do not understand or don't want to understand that you just cannot do that. Um, Recessions, depressions have to run their course. There is no other way. There is no way to fix it just because there's too much debt and too much capacity in the system. So the TED spread does talk a little bit about somewhat increasing distrust happening between banks. But while all of this is going on, I'm mostly sitting on the sidelines. I do not trust the up moves, and I'm just willing to hedge and basically avoid this, what I consider a very irrational market. That's all I have for this week. It's not very exciting, but such is life. Hope you good time, make lots of money, and good luck next week. Bye.